Well, Q3 2023 earnings season continues, and Amazon has just reported in the last few days, and not surprisingly, the stock is up since earnings because it was a pretty good earnings, certainly compared to about a year ago. Before we get into the financial results, let's have a quick look at the share price movement since earnings. Now, if you're watching on video, you'll see on the screen there that the stock is up 5.58% over the last 5 days, and earnings was during that time. You can see the graph there that it jumped up immediately after earnings, and it's had some good days since then as well. And if we see the year-to-date period, we can see that the stock is up 55% over the year, as quite a few tech stocks have been over that time. Some have been up more than that, but Amazon's done pretty well for this year to date. Not much of the year left now. Hi everyone, JJ here with The Art of Value. Welcome. Well, if you're a regular here, bit of a change of scenery today, upstairs rather than down in the studio. And let's get into the Amazon financial results. So let's see why the stock price has acted so positively since the results. What could be the cause of it? Let's get into it. Well, this time last year, Amazon was on track to incinerate almost $20 billion of free cash flow, and it's a turnaround this year. This year, they're generating well over $21 billion of free cash flow. So you can see why just from that the share price has acted positively. So dramatic improvements in terms of cost, efficiency, and growth, and pretty much across the board, not just in one particular area, but pretty much across the board. It's been pretty good for Amazon in this past quarter. Now let's look at the results in the various sectors. We can see in North America, their base, of course, we can see that it changed from a loss last year to a very sizable gain of 4.3 billion, which is good to see. Now in the international segment, we can see that the big operating loss that they had last year has narrowed a lot to almost break even, a big turnaround there for international. Now, if we look at the important AWS sector, Amazon Web Services, we can see that operating income went from $5.4 billion to nearly $7 billion from the last year's quarter to this year's quarter, Q3. Now, we can see that overall consolidated operating income came at 11.1, nearly 11.2 billion, and this time last year, only 2.5 billion. Now, if we have a look at the individual segments in terms of net sales, we can see here that AWS came in at 23 billion and last year at the same time 20.5. So quite a jump there, a decent jump from year to year. Now, if we look at the advertising services sector by itself, we can see that it's up to 12 billion and last year it was 9.5. So a significant jump. And if we compare it to AWS, it's really gaining on it. It's half the net sales for the quarter from year to year. So it really, people don't really talk about this too much, although people are starting to really notice that advertising is a big part, a growing part of Amazon's business. And we can see here that that is absolutely true. Over time, could it get to be the same size? If we think about these other companies like Meta and Google who rely so much on advertising, this is coming in a little bit under the radar here, becoming a big part of Amazon's business as well, growing quarter by quarter, year by year to become a sizable chunk compared to AWS. Now, if we look at Amazon online stores in terms of net sales, we can see that it's 57.2 billion as opposed to last year 53. So that's a jump there. And physical stores, not much of part of the business, a small part, 4.9 as opposed to 4.6 last year, nearly 4.7. So a small part of the overall business, and also third-party seller services up to 34.3 billion. This time last year, year on year, 28.66. Now, conveniently for us, we can see the growth figures sector by sector in the supplemental financial information. They've provided that. So we'll go through that sector by sector because it's really interesting to see the growth figures here. We can see online stores for Q3 2023 was 6%. And you can see over the quarters there, it's kind of been up and down. Well, in Q3 2022, it was 13%. And then it went down to 2 and 3 and 5 and 6. So it's in single figures there. It's got pretty low, down to 2% at one point, 13 last year. And when we look at physical stores, we can see that it's 6% growth in Q3 2023. Q3 2022 was 10%, and the quarter before that was 13%, so it's down to 6 and 7 over the past few quarters. Third-party seller was 18%, so pretty strong growth there. it's been 18, 18, 20, 24, 23, so pretty consistently, at least double figures, over 20 at some points, but down to 18, which is pretty strong. And subscription services, we can see that it's 13% at the moment, and before that it was 14, 17, 17, so fairly consistent growth, double figures there, over 10%. Now, advertising services, which is the fascinating one. If we look at advertising services, it's 25% for Q2 2023. Really strong growth. Before that, it was 22, 23, 23, 30 in that quarter, Q3 last year. So really strong growth in advertising services. It's one that has gone a little bit under the radar. If people think that AWS is the only strong sector that Amazon has, it's not true, because advertising services is really growing there, sort of a little bit under the radar. If you're not paying attention, if you're not looking at these financial results, you might not know that it's growing that fast. And as I said, these other companies, Meta and Google, rely heavily on advertising. And I think Amazon's decided that it can have a big slice of the advertising pie too. Really, really targeted advertising. Of course, there have been question marks over whether that advertising is sort of monopolistic or unfair, but that is 25% at the moment. And AWS is 12%, which is pretty disappointing. I think people were disappointed by that, but the stock price has gone up 12%, 12%, 16, 20. In that strong quarter, Q3 22 last year, it was 28%. If you look at the competitors in that sector, Google and Microsoft, there it is lower than that, but it is a much bigger business. They were first movers there, building that business. Jeff Bezos saw that as a business. He was building it in the background there, didn't really want to break out the figures, didn't really want to talk about it much, and then they came out with a strong growth once they'd got it all together. It was one of their strongest businesses, and people focus on that now, but now we see that advertising is also growing. Now, one other important thing to know with AWS is the operating margin. As you can see here, it's gone up to 30.3% after dropping. It was 24, 24, 24, 26 in that good period last year, that good quarter, and 29% before that. So it has dropped. It was bigger, but now it seems to be going up. Well, they had a strong quarter, at least a strong operating margin for that quarter. So investors will be pretty happy about that. Another reason for the good performance in the stock after the earnings. Now, another important overall number to look at is net cash provided by operating activities. We can see there that for Q3 2023, for the 3 months, it was 21.2 billion. And just 1 year ago, the 12 months ago, was 11.4. So nearly double a year ago, which is pretty good. Investors will really like to see that. At the same time, we can see CapEx here, or purchases of property and equipment. Some of CapEx went down year on year in the quarter from 16.3 to 12.5. So that is good to see as well. So at the same time, costs are coming down and profits are going up. We also see that stock-based compensation, again, with Silicon Valley companies, a lot of them have such huge stock-based compensation, and it is still going up, but it's not a massive jump this time, just from 5.5 billion to 5.8 billion they've got on the cash flow statement there. Now, having dived into those numbers, we can talk about the company now that we know those numbers, and investors, existing investors, I think will be pretty happy about that. I don't think that many people will be selling based on those numbers, going from negative last year to firmly, strongly positive right now. It's a pretty good story. Now, if you're getting value out of this episode so far and you're watching on YouTube or on X or indeed on Rumble, on there too, please remember to hit that like button to help the algorithm to spread it to more people. Now, if you want to take the extra step to show your appreciation for the art of value, you can now go here to buy me a coffee, just a one-off payment, not a membership or anything like that. I really appreciate that. It takes quite a lot of time and effort to put these videos together. Disclosure, I'm not an Amazon shareholder. I'm not planning to be. I can talk about why I wouldn't buy based on these numbers, and it's not about the price at all. We need to look at some of what they're doing. Amazon is a huge company, a big company, and for me, I look at smaller companies. This is a mega cap company, and the big question mark, as it is for the other mega cap companies, we look at Apple and Google and Meta and even Tesla, perhaps especially Tesla, is that they're massive market caps, and if you want them to go up 5 to 10x over X period, over what period you choose, then can these companies do that? If it's an over $1 trillion company, I said this in the Google video that I made, in the Google episode, that if if you want it to go to 10x one day over time, or even 5x, to go from a $1 trillion company or near a $2 trillion company into 5 or 10x from there is a massive thing. They have to find areas to grow. Now, we looked at advertising there. That's one area of really strong growth with Amazon. But can we see that the online retail, yes, they can grow internationally. It's not going incredibly well. And they do have competitors. Alibaba there, which I've looked at too, has an international segment. They're really ambitious timeframes in terms of delivery, so they're competing there with the likes of Alibaba internationally. And what else have they got to be able to grow that much, to grow 5x, 10x over time, as opposed to a smaller company, say a company that's $1 to $5 billion. I said exactly the same thing in the Google video. If you've got a $5 billion company and you want it to 10x, it only has to go to $50 billion. I say only, but not many companies get there. It's really hard. So to get these companies that are this big, and they've got regulatory scrutiny. That's the other thing, the other big question mark. Amazon certainly does. Google does increasingly. You can see that the regulatory authorities, the government, are looking at these as monopolies, and really they are. They've been such strong growers over a long period of time. You could see a time when the government and the authorities start to look at these companies as monopolies, and they are doing that. They absolutely are doing that. There are initiatives for growth that they've talked about, but is it enough is the question. Do we have another, say, AWS? Is advertising big enough to 2x, 3x, 4x, 5x, whatever? Do they have initiatives that can do that? They've talked about an initiative in Texas, College Station, where they're starting to deliver medication by drone service, which is kind of a novelty. Could that grow huge? Could it increase the amount of deliveries? Could it shorten delivery times? It seems like a novelty at this point. And is something like that enough to grow substantially, or is it kind of just a PR bit of novelty? So fulfillment is an area where they're looking to grow. They also have bets in terms of pharmacy. They have in the medical field that Jeff Bezos has talked about the medical field before, and they are looking to grow in that area. That's certainly a massive sector that they could get into. That could provide growth. They've got a partnership with Blue Shield of California. Blue Shield's 4.8 million members, offering fast and free delivery of prescriptions 24/7 in 2025. So a couple of years out there using Amazon Pharmacy. So that's one of the big focuses. But again, is that enough to grow the company hugely over time? They have talked about that being a market medical that's ripe for disruption. It's certainly super expensive in the US compared to other countries. It's sort of mystifying absolutely how expensive it is there. But Amazon thinks that they can help disrupt there. They've also got Amazon Prime Video. They obviously have aspirations to grow big. They put a lot of money into it, including certain programs. But can that even move the needle for Amazon? Can any of these things really move the needle once they get this big? Because even then, if you look at the market cap of Netflix, even if they got to that big or even bigger, it probably wouldn't matter that much. It's the same problem that Apple has, really. They're such a big company. Both these companies, all these big mega caps, need something huge to move the needle. That's why for Apple, people were talking about electric cars. That's a sector that's big. It's probably, maybe they're looking at the margins and thinking it's not good enough. Not investment advice at all, but that's basically the crux of it for me. These companies are too big for me. I'm looking for bigger growth over the long term, and I just don't see it with these companies. It's certainly possible that they grow double figures over the time if they really grow in certain areas, but really, are they going to 5x, 10x again? I mean, people have been really enthusiastic because they've done so well. They definitely are monopolies, I think, in certain areas. But can they grow even more? That's why I'm not interested. I'm interested in smaller companies. But if I'd invested earlier and just held on to it, then I probably wouldn't sell. Wouldn't see any reason. But Amazon over the next 5 years, I think it's uncertain. Even though they've got strong growth here, the last few years haven't been great. Got growing competition in some areas. Advertising's doing well, but it's not enough for me. I'd say it's really good. These are really good results, but it's not enough for me. And they're too big mega caps. How big can they really get? That's what I think of it anyway. As I said, not investment advice. That's just what I think about Amazon, but it's really interesting to go through the numbers, and it's doing well, and these were great results. Now, you might not know, but I'm trialing live stream shows at the moment. We're a bit longer. I know it's not for everybody. They're over an hour sometimes, but we can sort of get into more depth. They're a lot more casual. I can get into the chat with people. So check out those wherever you're watching. It's on YouTube. It's on Twitch. Twitch. If you haven't checked out Twitch before, go and have a look there. It's the Art of Value everywhere, and on X as well. You can live stream there now, so I'm doing that. Check that out if you want to, and let me know what you think. Now, if you're watching on YouTube, I'm going to put a link here to the previous video I was talking about Google, their current results, their Q3 2023 results, if you're interested in that too. And here I'm going to put a video of what YouTube thinks that you should watch next. Thanks for watching or listening this time, and I'll see you in the next one.